want to introduce here at this time Rob Friesen, who is President and COO of Bright Trading. Rob's actually, I'm a Bright trader. I've been known Rob and been trading with Rob here for the last 14 years. Rob, how you doing this morning?
Great, Dennis. Thanks again for having me on the show. I appreciate it.
Rob, tell us a little bit about Bright Trading. I talk about it sometimes on the show, but maybe you can back us up and tell us a little bit about what Bright traders, what they trade, and how they're different than maybe your normal retail traders.
Well, Bright Trading is a proprietary trading firm, which means traders get to use firm money for their buys and sells. And every trader wants to expand their business and bring on more strategies, and it's great to have access to additional capital when you want to do that. You don't have to sell one stock in order to buy the other stock, or you're not under the pattern day trader rules, etc. So we definitely love to provide capital overnight, intraday, and that's what our firm's all about.
Now, Rob, a lot of your guys there, I know, they're more into pair trading, statistical arbitrage type traders. Can you just briefly discuss like pair trading to some of our listeners here?
Well, a lot of times it's very difficult to predict where things are going to go. It's much easier maybe to compare a couple peers and say that one stock is likely to outperform another stock within the same peer group. So by owning one and being short the other one, you can create yourself a relative value play or relative performance play. And so profiting from the changes in supplier demand between the two, profiting from the performance difference between the two, that's called pair trading. And we do a lot of that in addition to baskets and other styles of being hedged.
So a lot of your traders do different types like pair trading, also statistical arbitrage where they're looking at relationships between different stocks. But also, I know you were talking briefly about your traders look at something called seasonality. Can you just discuss seasonality for a minute and discuss what that means?
Well, seasonality would basically be looking at particular time frames. Another thing is called the calendar effect, how different times of the year the markets perform in a predictable fashion. Anytime you got more than 50% occurrence in one direction, you're going to have a bias possible. And seasonality at the end of the month is also called turn of the month effect. We kind of use a 5-day window. Others use a 4-day window. Sometimes it's just the last day of the month and the first 3 of the new month. Sometimes it's the last 3 days and the first 2 of the new month. Regardless of how you approach it, through that entire 5 to 6, even 7-day window, there seems to be a bias that goes back, 100 years. And most of the returns that the market has had have been evident just by being in positions over the turn of the month. It's statistically provable. I can cite lots of references to it. Anyway, we tend to look for discounts prior to the seasonality window, which we did get a substantial market discount. If you want to bring up a chart of just SPY there for a minute, you can see that going into seasonality, and the seasonality we tend to use at Bright Trading is 3 days before the end of the month. So that means yesterday was the first day of seasonality, and bring up you got a daily there, okay? So we're started to turn around and pop up.
So typically, you're just saying that the last 3 days of the month typically show strength as the month's about to turn. Is that correct?
Right. There's just a calendar bias,
right,
and it's because there has to be an explainable reason generally, and I think that it's because of payroll deposits and people. Those are basically liquid assets that people can then deploy, and whether it's pension fund managers that get allocations, or whether it's in the private sector, money goes back into the market, and that's been a bias that's been in play for 100 years already, and doesn't seem to be slowing down at all. You probably get, you know, 10 out of 12 months where it performs right on cue within a calendar year.
Wow.
So
So
definitely something that people want to use. So you would think then, is if this is true, does it happen around the world? And out of 30, I think it's 34 markets that are something that we could, trade and track. It's been occurring in 30 of them. So in 30 market centers around the world, out of 34 have seen this same turn of the month effect over the last so many years, as long as they've been in existence.
wow, that's pretty cool to know that, you often see strength coming into the end of the month for those different reasons. A second thing I know you guys do is you look at like the seasonality on specific like sectors. Like I know we were talking just briefly before the show started on the ExxonMobil Chevron, and you were saying, typically this time of year the oil is out of favor because we're a little bit warmer. We're not into the cold months here yet. And ExxonMobil has had a pretty drastic, obviously, downturn here before the recent update yesterday, but it's been very much underperforming the market here for the last
Well,
month.
yeah.
So I guess that trade has kind of been working up till yesterday, correct?
Well, the XOI, which is the oil sector itself,
Yep.
normally is a short, from September through November.
Okay.
That's typically what we see in terms of seasonality. However, we have a macro picture catalyst that is overriding what would normally be seasonality at this time. Now that means, it could still come into play, and then we get even a better seasonality play because we have all this premium. But I mean, Exxon makes up a large percentage of XLE, for example, and you see that nice healthy bounce after a big downtrend. This isn't the time to be a hero on shorting that.
Right.
We've got to respect the macro catalysts that are out there.
So yeah, so you
And
might have an underlying like negative effect of seasonality, but with that macro Syria effect, that's going to overpower that. So if you're just playing it from just looking at it from the seasonality, you could get hurt here because the macros obviously with that Syria is going to probably pump oil higher.
well, and if something gets resolved there, you've got a great short. It's no
Right.
different than
Right.
it's no different than VXX when it normally is a decaying product because of contango and the instruments that make up VXX. It's over the long sample. If you want to bring up a monthly chart, you'll see how incredible the VXX decay actually is.
Yeah.
So here's what happens
Wow.
when markets are suddenly, bouncing back and fear is dispelled, and money managers don't have to buy puts any longer to protect other people's money, like the portfolios they trade. You see a rapid decay again on VXX. So you have the overlying theme of it's a constantly decaying product that they reverse split, but then you have your premium that comes occasionally based on fear in the market. But as soon as things start to stabilize, that's a great short. We can take the same underlying theme of seasonality on oil, for example, and say, you know what, we've got this temporary premium because of another catalyst. Let's let it run its course. If we start to see things settle down and everything's getting factored in, then we could have our seasonal short again. So you have to just respect what the latest catalyst is and whether that is messing with your typical biases. No different than somebody could have a technical short on anything out there, and something else could come along and ruin that trade. And that's why we trade a lot of pairs, Dennis and Joel, is because the market can interfere with your great idea, right?
Right.
You can have the best setup on any single stock, but the market could come in and interfere with your trade because in general most stocks are correlated with the market. So if the market wants to rally, it could wipe out your setup on your technical trade and you'd get stopped out. With a pair trade, you might still benefit from the other side of the trade performing along with the market, offsetting your losses, or even outperforming and getting you a profit from what would have been a loss.
So it's all just relative, looking at the relative outperformance, or the
Correct.
relative performance of each individual stock, and then that takes that whole macro risk kind of out of it, correct?
Correct.
So, and that's what most of your traders there at Bright Trading kind of do, is more of that stat arb, looking at these different seasonality effects, looking at numbers, and obviously if something works 55% of the time, there's an edge there.
It could be, yeah.
Well, that's great, Rob. All this stuff very insightful for us and for our listeners as well. So we do thank you. Do you mind sticking around here? Obviously, we got to go into what's happening elsewhere in the world here. But do you mind sticking with us for the questions and answers, possibly there at the end?
Yeah, no problem at all.
Okay, Rob. Okay,
Okay,
so we
well, my first question, I have one for you, Rob. What about the seasonality pattern of sell Rosh Hashanah and buy Yom Kippur? Are you a follower of that?
Yeah, there's actually a lot of different calendar effects, and historically September, by the way, is really a bad month. If we want to go back 100 years, it only has a 43% chance of being positive, down 0.84% on average. So it's not a great month. There's two bad months for the calendar year according to 100 years, and that's February and September. If we go back 50 years, it's May, June, and September. And if we go back 20 years, it's February, June, August, and September. So September comes up in every screen, and again, this is cited. This is from Bespoke Investments, but there's a lot of information out there on the subject. But so we do have to be cautious. Bear sentiment has been rising quite a bit. It's had 6 straight weeks in a row of rising. That's the bear sentiment. So now we had that pullback in the market. Some of that's being factored in, but some people say things are looking a lot like 1987 again in the way the market's been acting. So I think caution is necessary, especially this time of year. And a couple of these Septembers that we've had in the past have been blowaway Septembers because of quantitative easing. So if you see some new signs of suddenly a new stimulus package is going to be announced, well, then I would definitely get more bullish. But if it's just run of the mill and there's no more Fed action other than the current policy, you got to allow for the downside as well. And
Okay. And Rosh Hashanah is definitely in the month of September, so that might be a reason for it. George has a question. He wants to know how he can find out how to follow the strategy about end of the month investing.
You can actually, Google it. You can look up turn of the month. There's actually a really good paper done on it. I forget at the moment who it was that conducted it. Lankenshock and Schmidt, 1988, was the ones that coined the phrase turn of the month effect. But, there's a lot of information out there. And really, you're going to be safer to stay with the household names, things that, people would be likely to buy when they get their payroll deposits and things like that. Also, part of it's window dressing, what fund managers would be buying. There are some ETFs that outperform others during the same window. So if we just said, okay, let's see if anything has alpha compared to the SPY during seasonality, that could also be something that you could back test and look for. So I'd recommend, people running some of their own back tests to see how things have done. But plenty of information available on calendar effect, seasonality, turn of the month effect, and it has been proven that the returns that you would get normally within a calendar year by holding all year and assuming the risk of all of that can actually be achieved by just being invested a few days a month.
Okay. Okay. Well, that's all the direct questions we have coming from our listeners regarding the season of trading. Rob, thank you very much for coming on today, and I'm sure our listeners like to hear someone else's voice on the airwaves, and we'd like to have you back soon.
All right. Thanks again for having me. Appreciate it.
Okay. Just